Investors are in unfamiliar territory with the United States hitting Europe with tariffs because it wants to buy some of its land. The US has bought big pieces of land before, of course, like Alaska and Louisiana, but always from willing sellers. Trying to force an unwilling Denmark to sell Greenland by increasing the price of its exports to America by 10% and then 25% in June, along with those of 7 of its neighbours, is a situation for which there is no precedent, and investors are flying blind. The biggest loser looks like being Germany, whose exports to the US in the first 10 months of last year were $128 billion worth, against Denmark's $10 billion. So Australian share prices were trimmed a bit today, with declines focused on banks and resources, following a small drop on Friday in New York and larger ones in Asia today, and some pretty big falls among base metals, silver and iron ore prices over the weekend. And the Aussie dollar was steady at just under 67 US cents. China announces fourth quarter GDP growth this morning, 19 days after the end of December, and amazingly, it's exactly what the government had targeted, 5% for 2025, after 4.5% annualised for the quarter. Now, slowing retail and property sales and falling fixed asset investment were offset by soaring exports, which hit a record of $1.2 trillion for the year, despite the tariffs on exports to America, which led to a 20% decline in those exports, but that was more than offset by sales in Africa and other Asian countries, as well as higher sales to Europe, which President Trump seems determined to increase further. And that's finance.